if you're doing a good job, right? If you're doing a good job as an AI agent, you should be kind of resolving 70, 80, 90% of the incoming volume. And so that doesn't even have to reach the CRM. That just lives in your system. So that's great, right? So then you kind of become the system of record for that. Um, but I think more importantly, you kind of become the system of record for like the business logic, and that's very important. And so that's like I think someone coined the term like system of intelligence for this. It's like not only you're just storing the tickets because that's one thing, but you're storing like how should like a agent at this company behave.
Hi, everyone. Welcome to Founders in Arms podcast with me, Imad Akan, co founder and CEO of Mercury.
And I'm Raj Suri, co-founder of Lima and Tribe. Today we have Jesse Jiang. Jesse, welcome to the Founders in Arms podcast. You are the co-founder CEO of Decagon.ai, is that correct?
Yeah, that's right. It's great to be here. Really excited to chat with you both. Quick intro on my end. Yeah, I'm one of the co-founders and the CEO here at Decagon. What we do specifically is we build a AI customer service agent. So these are systems that actually go and talk to end users for large businesses over chat or email or voice, and the goal is to give their customers a great experience and drive a ton of efficiency for them. Before this, originally studied AI at Harvard, started a company afterwards that was acquired by Niantic, and so this is the second one.
People have been talking about kind of AI agents kind of replacing customer support. And I think Klarna did something about like firing 80% of their customer support. It's hard to tell from the outside, like what's real and what's not real. Like, yeah. And then you don't have to like tell us like the specific companies, but when you get deployed, like, are you replacing human labor? Are you making it more efficient? What percentage of human labor do you think you can replace? Like, how, where are we in like this kind of CS agent game, I guess?
Yeah, I think my view on this is that it's a really hot narrative to kind of say that, oh, AI is like replacing humans. I think in reality, it's not really that. It's not really. I think most people don't think about it that way, and it's really customer dependent. So we have customers that maybe they're later stage and they do just care about efficiency, and so their goal with the deploying us is like, hey, we want to, you know, uh, either reassign a chunk of our team or be able to, downsize the, BPO operations that we're using. Or it could be like, hey, our business is growing super quickly and we just don't want to hire, new people linearly with the amount of growth we're having. So I think that's one category. But then still another category, and I would say this category is bigger, is that they're kind of coming to us because, hey, we think Gen AI is so powerful. We just want to make our customer experience better. If there's efficiencies, that's great, but those are kind of like table stakes and that's lower priority. Like we want our NPS to go up, we want our revenue to go up, we want our retention to go up. And I would say that's probably like more
Well, why
common
would
in
the
terms of
customer experience improve?
so yeah, we've all used kind of like traditional chatbots, right? It's like super frustrating. A lot of times you just or you get on the phone and you're like, all right, press zero, press zero, press zero, like give me to human. And there's a reason for that because without generative systems, this system is pretty like you can do your best, but like we all know it's not a great experience, right? And the reason is because the system is quite brittle. It's pretty hard to like be able to iterate like a lot of logic. And then you get stuck down a path and you're like, oh, that's not really what I was asking. Like, let's try to go back, and then you're stuck. So that I think a lot of people just care about that first and foremost. And we've seen some great results of like, someone's NPS was here. And then after like we come in with a generative system, like the NPS like, goes up like 3x or something like that. And that's really what we see more in the markets. And what when we
So what
talk to
you're
leaders,
saying
that's
is
what excites
like
them.
it's not quite there where it's replacing like your in-house customer support, but your current kind of like automation and like this kind of lame chatbot slash like press one, press five that you can replace, and maybe you can replace your kind of tier one BPO customer support. So it's like it's improving the experience, it's replacing some stuff, but it's not like replacing kind of your, it's a
Yeah,
difficult
like you
problem
you
and
shouldn't be thinking about it as like, hey, I'm gonna fire all my in-house support agents. Like you'll be able to downsize if you want to. So we have customers that literally reduce their teams by maybe up to 80%, but it really depends on what their priorities are and like what they want to get out of it. And also, of course, it depends on the distribution of their tickets and stuff like that.
Yeah, probably depends on the type of company as well. We're actually looking at Decagon, and we are very much looking at it in terms of like this year, either we got to get a BPO to, do our kind of tier one customer support inquiries, or we do some sort of AI solution because Yeah, it's like, I think the number was, it's like 30-ish% of the questions are like very, I mean, not very easy, but quite easy to answer.
Yeah.
And they don't actually take the majority of the CS time, but it's just not like useful time. I think it's like 5-ish% of the time. I'm like, those are like the rough orders of magnitude on like the percentages, if that makes sense.
Yeah, I would say if the comparison is between like adopting a good AI agent and like a BPO, that should be like a very obvious position to be because with BPOs, because they're outsourced, by definition, none of the tasks are going to be that complicated or that involved. And then you have this process of needing to train them, like they'll churn. There's like all this cost about like maintaining the sort of like consistency of level across all the agents. And so that's a good point.
Emma, why are you thinking of like what's the benefits of the BPO that you're thinking of? Jesse's saying it's an obvious decision. I'm curious. What do you think?
Um, well, the reason to do a BPO is, we have aggressive growth goals this year. And like we have, I think, 60 CS agents, right? Like we don't want to go like, if we're going to double our users, do we want to double, like we have to go hire 60 people and train them, and right, like that's like a very uh it takes a lot to like double any operations team, especially when you've got like a reasonable scale. So, if instead of doubling, maybe we can grow the operations, like the customer support team, by 50%, and like we can use AI to like fill the gap. And why do it instead of BPO is, when you're using BPOs, it's actually, I mean, they're still like humans. You have to train them, you have to onboard them. They still make mistakes. So there's QA, all that stuff, right? So it is a little easier to hire 60 people via BPO, like the like more scalable talent, and a bit cheaper. But like, at least the dream is that something like Decagon does it, and this is turning into an ad for you here, Jesse. But
Hmm.
yeah, the dream is like you just train the AI once, and you can monitor it, and you can keep improving it, and yeah, eventually it can do more complicated things, and it can integrate into your systems, and like do all this stuff, and know when to escalate to a human, etc. And it can answer questions quicker, and like in the middle of the night, right? Like we actually just hired like 5 people in Australia and 5 people in Ireland, literally to answer like questions in the middle of the night. So yeah, there's just a bunch of things that, like, if an AI can do good enough and like give instant answers to a bunch of queries, it would be just, as Jesse
Yeah,
said, also a better customer experience.
yeah, exactly.
Is anyone doing this really well right now? I think Jesse, you mentioned like a really good point. Like it is annoying for all of us. And actually, this sort of like space of attempted AI, where it's not like quite perfect, but it's like okay, is that it is a pretty annoying kind of middle zone right now, where it's like someone's trying to use AI, but they're not really doing a good job, and you're like, well, maybe you ask one question, it gets you a little bit further, and then the second question it fails, and then it has to do a human, and the human doesn't have context. Like I feel like most consumer service, at least what I use, doesn't seem to have nailed this one.
Yeah, I mean, so and to your point, right? There's been a long history of automation in this space, which makes sense because it's a very kind of obvious space for automation. Like you originally had people building the CRMs, and then like people building IVR systems, and then after that there were like the chatbots, which were a little bit smarter. They use like basic NLP stuff. You can do classification and intent routing and stuff like that. But that still gets us in the current position where anytime we're on something like this, we're trying to get to human as quickly as possible. So the step function change has been like this generation. And obviously the space is still early, so I wouldn't claim that anyone has like, including us, like solved it. I think there's just a lot to build still. But obviously, I think the reason why we're growing quickly and the other folks building Gen AI solutions are kind of getting adoption is because people are seeing this step function change. And I mean, we have our own unique take on it. I think other people probably have their own view, but I would not claim that anyone solved it. I think the reason why that this generation is better and like why I guess I can speak for us, like why things have gone fairly smoothly so far, like knock on wood, is that if you look at the approaches that everyone has taken, including a lot of the Gen AI players, it's kind of using this system of, hey, we have all this logic that we want the AI to do. Let me like try to program it into like some framework, right? And like the framework in the past used to be some like decision tree or whatever. And like these days it could still be some version of decision tree plus some code or something like that. And the issue with that approach is that it's very like unlike how you would teach a human naturally. Like it's really unnatural for us to teach systems that way because you have to like figure out like, oh, okay, how do I like jam into this protocol? And you end up getting systems that are more brittle because you get stuck in one area, it's not as flexible, and it's just a lot slower to iterate because it takes a lot of time to build these systems, and you kind of need like a specialist group of people to maintain them. And so our approach so far has been radically different. We believe that you should be able to teach these AI agents the same way to teach a human. And the way you teach a human, and Amal, you mentioned it's 60 people. It's like you have SOPs that are like, okay, I've defined and like written down instructions for new agents to come in and read. And so we've created what we call AOPs, agent operating procedures, and that's kind of like the main innovation that we've made, which is allows you to kind of use natural language to define these procedures in a very robust way. And then you can iterate a lot quicker, and you get to higher quality a lot faster, and it's cheaper to maintain as well. So that's been our approach, and like that's why I think this generation has been better. But yeah, I would not say it's like solved yet.
Jesse, we had dinner recently, and you were giving some insane stats. I don't know what's public, so like, what is your public kind of out there about like how fast you're growing, and yeah, what metrics do you talk about?
Oh yeah, no, appreciate that. I mean, the only thing we're public about is our funding. So we basically started late 2023. So this was post GPT-4. And we kind of did our process of, discovery, figuring out like what use cases could make sense. So we decided, customer support and customer service or just customer experiences broadly is like the best space. So we started building, we raised a seed A and B within about 12 months, 100 mil total raised. And yeah, I mean, I think that's what we're generally public about. And I think there's still a lot of room to grow. Obviously, like the space is gigantic. Like the reason we're not that public is because I don't think we want to brag about what we've done so far. Because I still think like there's
Are
still
these
so many
numbers
things
that you
we've.
see on like on X or Twitter, whatever, real? Like when people are like, "Oh, this AI company got to 100 million in revenue in like 2 years," and you see a bunch of this stuff. Like, I'm a little skeptical when I see these numbers. Like, how much of it is real from your perspective? And like, I guess like not to put you on the spot here, but yeah, what do you think of the other companies that do profess these like big numbers?
So I think there's three modes here. The only company I'm aware of that's like remotely close to that is Cursor,
Hmm.
and I think Cursor is real. Cursor is like a
Yeah,
absolutely
yeah.
insane business. But that's kind of like if you look at the spectrum of like prosumer or like consumer, that's like yeah, I think those things can be pretty explosive. I think on the enterprise side, I think that a lot of folks that are growing quickly in like selling to SMBs or other startups, I think that's a little shaky because the churn is actually quite high. And I mean, I actually don't know much about like the AI for sales space, but that's what I've heard. Like, I think a lot of those tools um, is just like you're getting a ton of customers, and so you get a lot of growth, but they're all small customers, and then it's like, oh, I don't really see the value, and then they churn.
Hmm.
I think for our space, generally our contracts are like 6, 7 figure contracts. And so there's a lot more of like people like really quantifying ROI and kind of measuring that way. And so I think, I guess to summarize my answer to your question, I think the ends of the spectrum are more real. So like if you're selling to enterprise or like you're something like Cursor, like that feels very real. I think the intermediate feels a bit more shaky. Not to say it's like not real, but I would be more skeptical of that. And I don't think there's that many companies on the ends. Like I don't think there's that many companies that are growing quickly selling to enterprise, and I don't think there's that many Cursors either.
I also think every business, and I mean, I assume enterprise to like medium-sized businesses, telling every team and saying like, "Hey, what AI tools are you using? Like, how are you driving efficiency or growing sales using AI?" So like, there's a lot of like top-down pressure for everyone to go experiment with this stuff. So it creates
Yeah.
uh, it's actually kind of like exciting to be one of these companies because you have like a sales opportunity. But yeah, it's like you can kind of be ahead of product market fit, right? Like you can
Yeah.
get like sales quickly, and actually your product doesn't work that well, so it churns.
Exactly. Yeah.
I can definitely say that.
Jesse, what you're doing actually reminds me a lot of what I used to do at Presto, where we did AI for drive-throughs, which is another type of customer service.
Yeah.
And we were quite early. I mean, we were doing this before ChatGPT, but it obviously got better afterwards. Um, and that type of narrow use case was actually really good for AI because it's like very clear where you're going when you go into a drive-through that you're there to order food, and there's only limited amount of things that you could order. So a lot of it was just training on the menu. and the escalations were pretty, also self-evident. I think even in that space, though, like it hasn't really reached full penetration or anywhere close to like even 20% penetration yet. It's such an obvious one. Like, yeah, I go to drive through, like, the humans in the restaurant are super busy making the food and doing other things. And the AI can upsell much better than a human. Like it actually remembers to like, ask you if you want the shake with your burger. But still, it actually hasn't reached, significant penetration. So what do you think the timeline is of like, like when do you think we'll get, you know, 10% or 20% of like all customer services like AI, or do you have any predictions on that?
Yeah, good question. I'm also curious to hear your take on why, at least in that space, the penetration hasn't been that high. So I think the reason why like there's like so much hype around AI is not so much that like people are. I think that the tech is cool, but I think like especially in the enterprise, there's hype because like I think it's similar to what Ahmad said. Like senior leaders have a ton of pressure to adopt AI, so there's like so much tailwind for them to just like push their team to like adopt something and just like be able to tell their board or tell their investors like, hey, like we're using AI now. There's like efficiency here, and that's great for our space because that means that some sales cycles that may have taken like a year and a half can be shortened to like half that time because like there's just a lot more movement and you have to get through like security and compliance or whatever. But like if the senior leaders really care about it, like that process becomes a lot quicker. So I do think the timelines will be accelerated. 10 to 20% penetration, I actually think will be there in like a year or two. And it's kind of like the like crossing the chasm curve where like I already think that the early adopters, I think that was like last year. I think this year is already like that you see like the early majority actually adopting, and there's a lot of large contracts and stuff like that. Again, the space is still early. Like who knows what's going to happen with these contracts and stuff like that. But um, yeah, I do think that adoption will be pretty quick. So yeah, curious why you think the adoption has been slow for the drive through space.
I think the value is very clear, but I will say one thing that it's dependent on is also the cost of labor and availability of labor. So that's a major determinant, right? Like you're comparing an AI solution against a labor, a labor run solution. So the cost of labor and the availability makes a big difference. When there was a big labor shortage a couple of years ago, especially coming out of the pandemic, the adoption tend to be much faster. Since then, there was an easing of those conditions. So then the value prop switched to more of the upsells and like the driving more sales, which is a good thing. But you want the labor part as well. Um, are you typically competing with like with folks who are using like offshore support? Is that the typical competition or legacy solution?
For like enterprises, when you're selling to enterprises, like everyone has like it's very rare for enterprise to have like a full onshore support team because the volumes are so large, and so you need that like scale and you need the flexibility. So yeah, I think that's almost always the case.
Yeah, yeah,
Seems like the difference for you, Raj, is like every fast food place has a person there already. So there's like a very direct trade off. It's like, oh, you could hire 5% more people, whereas like with customer support, you might have 1,000 people, and like if you can like have a 20% gain, it's like it's a lot more scalable and easier to apply and do the reasoning of probably. Uh, would you say that's true?
yeah. I mean, I would say like it's also because you needed a person physically at the restaurant. It's not easy to find that person, right? Like it's and that person tends to be busy, so there is a reason for that as well. I mean, yeah, if you have a massive team of people in a call center somewhere, then you could get more efficiency, I guess, from that. But there's also less friction in also distributing the calls internally to some degree.
Jesse, the as an investor, actually in Decagon, but in this space in general, like the two things that always come up as like when you look at a startup is number one, especially as these models get better, is it's super easy for another startup to come along and say, hey, we're also using OpenAI, we're also going to have a CS agent, and that, I mean, that has happened in this space, right? There's like 100 freaking CS agents, uh, and then number two, all of these platforms out there, whether it's like Zendesk or Actually, I don't know what all the other ones are that do CS stuff. Like they're all obviously also going like, "Hey, we need our CS agent." So uh, I think your space actually like very much personifies both those problems. So uh, I would love to hear, not just for Decagon, but in general, like what are things that like on both sides are like moats that startups can have? Like how can they not be just a GPT wrapper, and how they can compete against like these incumbents that already have distribution.
Yeah, good question. So it's like the classic, oh, if you grow super quickly, that's awesome. But the counter to that is that means that it was actually quite easy to grow quickly, which means other people can actually come in and the barriers are low and like they could possibly grow quickly too. And I think that's true. I think that's true of like I don't think that's even true of like just AI agents. I'm sure there's like many SaaS spaces in the past that were like this. And so typically what happens is, there's like a lot of players and then eventually like probably two, maybe three, if the space is large, like people kind of consolidate and like become the winners. And if you look at like why they become the winners, I think in reality, in my opinion, it's just mostly like they just have the best teams. They move the quickest. They're able to like build the best product like faster. And so that's more or less what we were focused on right now is like, okay, it's like a very heavy like execution thing. And again, like most hot spaces are like this. So like you just have to make sure like every day your whole team's locked in. There's like a ton of execution excellence there. But then of course, structurally, you want there to be some like lasting advantages from the product. And historically, this is like the classic, oh, you're either your system of record or your system of behavior or whatever. And um, I think every AI space that's going to look a little bit different. I can kind of explain what it looks like in our space, which is that originally you had CRMs, right? So like those are kind of like the system of records for when you have a million support tickets and they all live in the CRM and like you have information and everything. All the agents are living in there. So if you have a good AI agent, you want to be thoughtful about how you can kind of take some of that advantage and get people like in your system as much as possible. If you're doing a good job, right? If you're doing a good job as an AI agent, you should be kind of resolving 70, 80, 90% of the incoming volume. And so that doesn't even have to reach the CRM. That just lives in your system. So that's great, right? So then
Hmm.
you kind of become the system of record for that. Um, but I think more importantly, you kind of become the system of record for like the business logic. And that's very important. And so that's like, I think someone coined the term like system of intelligence for this. It's like not only you're storing the tickets, because that's one thing, but you're storing like how should like a agent at this company behave, right? And it's like kind of consolidating all the knowledge around, how do we handle this workflow? How do we handle this workflow? How, like, what should the tone be like? What words can you say? What can't you? And if you're
Say
spending,
system of intelligence, are you talking about actually integrating into the backend like database and all these things and actually executing things on behalf of like the
exactly,
agent? Okay. So it
yeah,
goes way beyond just like a read only kind of thing that just like answers things. It actually goes and like does the thing in the back end and like goes and like resolves something or ships something or something like that.
yeah, exactly, right. So let's say like working with a financial services company, it's like I have a credit card and I lost my card and I need to reorder a new one. There's like a very specific way that that company wants to handle that process. And it's usually not simple. Usually you have to like hit many data points and like take an action at the end and maybe you have to lock their old card or whatever, right? And so that is like the intelligence that you need to learn. And it takes time to learn this and like the company will continuously like iterate on this over time. And so if you're a year in, ideally you've built up so much intelligence there that it is actually like hard to like replicate that. And there's just like a lot of like
I like
stuff
the
there.
system of intelligence. I've never heard that before. Have you heard that before, Raj?
No.
Yeah,
Sorry
Yeah,
about that.
it's like
you should make it
the
a thing, Jesse.
we will. It's kind of like the so yeah, system of records are strong because there's just so much there, right? It's like, oh, like if I got a new thing, I'm gonna have to like somehow export all this stuff over, and then like all my metadata will be messed up, and like so that's like the same idea, and I think that'll probably be more and more common for AI agents.
Yeah. And it fits your space very well. Like a sales agent doesn't necessarily have a system of intelligence as much. I mean, they can answer questions, but there's not like that. There's not the go do this thing in some internal system that like is going to be complicated and have lots of like other systems to integrate with and logic associated with it.
Yeah, it's interesting. I'm actually I haven't really thought deeply about this for other types of AI agents because if you look at like coding agents, which is kind of like the other big space in addition to support right now, it's like Does this exist?
Well, every company has
Maybe.
like different
Yeah.
coding style.
Yeah. Yeah.
Like they have different rules around like what kind of testing frameworks you have to use, and
Sure.
yes, but a lot of that stuff does
Yeah.
get standardized because of like open source, and like developers want to use like the same systems between companies, maybe.
Yeah. Yeah. I think the other way to put it, I think the level of customization for our space is very high from customer to customer. Like each company has their own way of doing support. It might be quite different. Whereas for coding, I would imagine it's a little bit more similar from company to company. So yeah, interesting stuff to think about.
Jesse, it sounds like you're also doing like a kind of a hardcore enterprise sales company. Similar to what I did as well. I know that's a pretty steep learning curve for founders. I used to always kind of enjoy competing with other startups because I knew how hard it was to be like really good at enterprise sales. And I found most founders, technical founders coming into enterprise sales really struggled with like the sales motion and the skills that you needed to win, which are very different than just building a good product. Like, it's you have to build a good product, but that's only step one. Like you have to do a lot of
What
other
was
things.
the Raj? What was the hardest thing to learn?
Um, just how much of it was relationship driven to some degree, and also how to hack those relationships. I found ways to like hack, like even though I didn't have the relationships, found ways to hack them, and also how much of it was also based on like hacking the incentives that enterprises have, right? Like they have incentives to like not be fired, obviously, right? So like the buyers are very risk averse. So how do you position yourself in a way that you're the safer option in every scenario, whether you're competing against a big company or a small company? So like and then also how do you like make sure you win the process every time? Like there's all sorts of different tactics there, which probably took me
What's your
five
best
to 10 years.
relationship hack?
Find people who worked with the buyer directly, like closely for many years, and find ways like to incentivize them, to be part of your company so that they'll win the deal for you. And
Do you mean like consultants or stuff like that? Like consultants or GSIs, like people like that? Or
ideally, it's like a colleague of that person who worked with them for many years, and like
uh
someone who's like worked hand in hand or worked for them or was their boss, and like find ways to get that person on your team in some way. Like you could make them an advisory board member. You could make them, a consultant for you. You could just go out and wine and dine them. But the key is to have that person be able to call the buyer as a back channel and get deals done for you. And like that by itself is way more important.
That sounds like way too much work, Raj.
Jesse, tell me if I'm right or wrong. I don't know if once you're in a head-to-head fight on a bake-off and stuff, you'll realize
yeah.
that this is the thing that puts you over the top.
I think that's true. I mean, I do agree. It's like it's been a linear learning curve, but my last company was consumer. I would argue that was like way harder, at least for me. I think it's like maybe person dependent. Like consumer is just like you can be bashing your head against the wall for like just like a long time and grinding and like there's a lot of luck involved, there's a lot of intuition involved. Whereas at least for enterprise sales, it's like more systematic. Like you have a lot of signals that are real. It's like they're like the big signal is like here's a buyer and like they're willing to pay money. Like can you get the money? So I think that part has made it better. But yeah, I do think there's definitely a learning curve. Like both my co-founder and I are like relatively young, and so there's I'm sure there's an advantage of like being older, having more of a network and stuff like that. But we've enjoyed it so far. I think it's like we're very competitive people. We like the feeling of like, hey, there's a concrete deals, concrete like goals to go after, and that gives us a lot of energy. So yeah, but I do think it's a learning curve. Like there's like you mentioned, Raj, there's like stuff like that we've had to adapt to. There's like how do you get in front of these people, right? Like right now, it is almost always a very network based thing because uh like yeah, when you're at that level of enterprise, like it's just like there's people have strong networks and there's a lot of relationship building. So, we've relied on a lot of our investors. We've relied on a lot of like, successful founders that are helping us. And so that's been helpful for us to get off the ground at least.
What has been the most useful in terms of networking with enterprises? Is it like you just ask like 100 people that are backers and kind of investors and friends of yours, or have you found like one particular channel is like particularly good in like helping you kind of get to these enterprises?
Yeah, I mean, it is mostly our backers. So we're pretty like open with them about like, hey, here's the accounts. Like can get us in front of them. And like we have amazing backers, and so they're really helpful. Also, like, yeah, big shout out to like the major VCs that we've raised from, like A16Z, Excel, Bain, like BCV. They like, um, I think there's a common trope where like VCs on the operating side are not that helpful, but at least I think it's obviously situation dependent because we had a bit of momentum and because we have a lot of interest from enterprises. Like they've really helped us accelerate like getting in front of people, and that's been quite helpful so far.
Yeah, I actually think VCs are more helpful in enterprise sales than like in a lot of other things.
Yeah.
I've, yeah, we mostly do kind of SMB startup sales, and there, it hasn't been that helpful to go like that deep to break like into like one single enterprise. But
All right.
but yeah, a lot of people like other portfolio companies. I mean, we're also backed by Andreessen Horowitz, and they're like, wow, they put me in front of this CIO, and I closed the sales because of it. And I'm like, all right, that's actually like super value add.
Yeah. 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 It is.
One thing that tends to help is like for any target company, they generally have a financial component or like a capital markets facing component. So like any board, like of a target customer, right? They may have someone who's like quite maybe working at a public company, and those people tend to be easier to get a hold of, and VCs can kind of triangulate their way into that board member, and that board member gets you access to the CEO. So I think like going through the capital markets route into a customer, even if the VC doesn't have a direct connection, they can go through that route, and it tends to get you more access that way. We found that was very successful for us.
Yeah, and that even like a lot of the enterprises have innovation teams, right? Or they have like a VC arm, and generally the advice is like it's not usually that useful because I mean, like they're incentivized just to talk to a bunch of people and so on. But yeah, at least in our experience, we've met some great innovation teams, and they've actually like made meaningful progress for us. And so I think it's just you got to try a bit of everything, and hopefully you can get the relationship strong enough.
I think it helps because the innovations team mandate right now is probably go find AI companies that can make us more efficient. So like
Yeah,
all the
exactly.
incentives kind of line up. What's your kind of general take on like this kind of model war, right? There's like every week there's a new state of the art model, whether it's like DeepSeek or the new Claude one. Uh, I guess like, do you think there's one that's better than the rest? Which ones do you use? Like, what is your general thoughts on like kind of the different LLMs?
Yeah, I think it's great that there's a model war. It benefits applications like us a lot, both in terms of obviously models getting better is good, but price goes down and so on. I would say that the best ones are still very clearly OpenAI and Anthropic. So I think like those are, yeah. I think any application like us, we will have like a lot of eval set up internally for us to evaluate the models based on like what we care about. For example, one of the things we care about the most is like how good it is the model at following instructions, because that's what really matters for our customers. I think Gemini is like it sounds like it's making a bit of a resurgence, at least from my like friends of mine that have talked about it. Um, so maybe those three. I would say that um, I don't think there's like a clear winner between OpenAI and Anthropic. I think their models are good for different things, and
How
so
quickly
like
can you test a new model, right? Like when DeepSeek came out, was it like, hey, let's go test it, and like within a week you
oh
can
yeah,
run your
like a
evals? Is it really quick?
less than a week, like within a day. Yeah.
Within a day? Okay. So it's super easy for you to swap these out. Like if tomorrow like the new llama comes out from Meta, you can put it in. If it's better, you can like start sending some traffic that way.
Yeah, exactly.
That's interesting. Do you think like these companies are gonna have like long running moats given how easy it is for applications to kind of switch them out?
It's hard to say, but like the other thing is, um, well, I was gonna make the cloud provider analogy, but it actually is not easy to move clouds. So
Hmm.
I don't think that really makes sense. But I do think it's like the advantage they have is that there's already like a determined set number of companies that could win as a model. So like they basically already won because even if there's like I mean there's like less sub five, right? So there's like sub five models that people will like conceivably use at scale, and like it's very difficult for other people to catch up. I mean, maybe DeepSeek, like distilling models, has like shown that that's easier. But I do think there's going to be like a oligopoly, and so it doesn't really matter that much if it's easier to switch between them, because as long as they're all kind of on par, they're all going to be like gigantic businesses.
Hmm. And maybe there'll be some that are better than others at different things. Like Anthropic
Yeah.
seems to be like focusing on coding a lot more and winning
Hmm.
there.
Yep.
So maybe there'll be like each model will have like a slightly different flavor to it of specialization.
Yeah, that's fair.
Jesse, what do you think of the space in general? Like, there's a lot of venture dollars going into AI companies. Um, some eye-popping valuations. Like, what do you see as real? What do you think is like, kind of just hype at this point?
I think, yeah, I mean, similar to the answer, but I think some of the like prosumer companies are real, and some of the enterprise companies are real. The middle ones, I'm like, I'll reserve judgment. I'm like more skeptical of those.
Mhm.
I think is just more like, and I feel like this doesn't get talked about enough. Like the incentives for VCs and founders are actually like not that aligned, because if you think about what a VC is incentivized, right? They raised a fund. They want to, look good for their LPs, and they want returns, and they know that AI is like super hot right now. And so they're just trying to deploy like AI dollars into like as much as possible, as many companies as possible. They're okay at the valuations that are inflated because they think that there can be one or two like huge winners. And as long as there's one or two huge winners, like you're good. But like, let's say that out of 10 companies, there's one winner. The other nine that they gave huge valuations to are kind of screwed, because for those
Mhm.
founders, you're like, all right, I got a great valuation, but like my company's successful. It's not like that successful, right? It's not like a like a 10 to 100x return on top of a giant valuation. And so for a VC, that's fine, because it's like, it's like whatever, right? I have like
Mhm.
a company that won. But for the founder, that really sucks, because now your prep stack is ruined. So um like any sort of like exit that you can have is going to be limited. But also it just kind of like it sets up all the employees for not a good result, because now their options are at a very high price. And um yeah, this is I feel like it's just like it's important for founders to be really responsible on this, because VCs will be very aggressive about kind of giving you money, and you might think like, oh, that means like the fair market price for me is like this, so like I should get my fair market price. But their incentives are different from yours, and so you should just kind of be careful around um, picking a valuation that like you're comfortable with, and like that should be based on like your revenue growth, ideally.
I think it's
So
really
yeah.
hard for a founder not to take the money. I mean, yeah, you're saying Jesse this thing, but at the same time, you did 3 rounds in a year, so
Mhm.
like,
But I don't think our valuation is that high. Like I think with our revenue growth, it's like a reasonable valuation.
yeah.
We have already been preempted many times for like subsequent rounds, and we decided to hold off like for this reason, because like I just
My
don't think
advice
it's smart.
normally to founders, and I think like it's very hard to say no to like a big valuation, and it's like I think that would require like almost superhuman strength, especially because like you're saying like, hey, our revenue growth is good. Like all of these founders also believe that. Like they're like, hey, we're growing fast. This is a huge market, right? Like everyone feels these things. So my normal advice is like, don't spend the money, and raise enough money. I think actually like a somewhat worst case scenario here is like someone like raises at $1 billion valuation, but only raises like 50 million and then spends it very aggressively. Now they just don't have like they didn't get like this hype will die down at some point, especially for their space. Uh,
Yeah,
and when the hype dies down, if you still if you actually in the same situation, if you'd raised 150 million and you've only spent 20 million, sure, the hype dies down, but now you have 140 million in the bank and you can like try to grow into the market, right?
mm,
Uh, so that's one piece of advice. And then the second one is always take a secondary. That way, at least, I
Mhm.
mean, it doesn't help the employees, but at least like you've taken part in this like upside and the hype and
sure.
you've set up. I mean, yeah, it doesn't like necessarily set you up for the future, but if you really believe you can build a $10 billion company, it might still be worth taking that $1 billion round. And like now you have the time to do it, right? Like I think a lot of the time it just takes time to actually manifest that like huge size. Like it's just like, in these hype cycles, everyone's like, it's going to happen in 3 years or whatever. But like the reality is most of the time to build a real, like even to build $1 billion company takes like 10 years, and to build a $10 billion company, it only takes like 15 plus years. So, you have to like survive long enough to make it.
what's your view on if the valuation's jacked up too high? Like if the multiple's too high, that means that like employees, their options could be
Yeah, I
underwater
think you
for a
like
while.
want to be. It's tricky. I mean, it screws up your 409A. Uh, there's a few ways around that. I mean, in general, don't go too far. Like if the market is like, you know, valuing you, like if most VCs are saying like, hey, you're worth 1 billion, like that's what like 3 or 4 people said, and someone else comes in with a 2 billion valuation, like don't go push it that far, right? Like there's the, like you can go 80th percentile, but don't go 95th percentile. So don't go over the top of what the market's saying. B, you can reprice options if you're like when the hype dies down, right? A ton of companies did this during uh, post like the 2021 hype. Everyone had these crazy valuations. 409As were crazy. 2023 came along. A ton of companies revalued their 409A based on like the new situation and then like reissued options. So there are ways to like make employees whole if you don't live up to it afterwards. It is much more complicated though. Uh,
Mhm.
Ideally, you just grow fast enough that it's fine.
Yeah.
But like that's
Yeah.
the other way. And like, I mean, the other thing you can do, and you probably have to be a more mature company to get there, is alongside a big round, also do an employee tender offer. So like
Yeah.
ideally, the
We're not
founders are
there
not
yet.
the only ones getting a secondary there.
Sure. Yeah. Makes sense.
Imad, how early should founders or employees do a secondary? Like nowadays, AI companies are doing Series A at billion-dollar valuation. So, yeah.
I mean, my take on it is it's very personal dependent, right? Like I think uh, let's take off my investor hat. I'm talking about the founder, right? Like,
Mm.
uh, $1 million to a young person. I don't know what Jesse's situation is,
Mhm.
but it's a lot of money, right? And if you are worth a billion, in theory, you as a founder might have 100 million of like this paper worth, right? So like,
Mhm.
I think it would be very irrational for you not to take some money out, right? But I mean, you're still like mostly like if you sold 10% of your position or 5% of your position, right? That can be extremely meaningful to you personally. Investors don't really care, like especially if it's a hot round, like they want to get in. And actually, like that actually to Jesse's previous point, it actually aligns you with investors closer, right? Like now you're thinking like, hey, I'm like successful. I've got money out of this company. Now I just want to make it the biggest thing possible. At least, that's the mindset that an investor wants, and I have. Uh, and because it is irrational to try to build a $10 billion company. Like no sane person should do that, right? Like if you just want money, you should just sell relatively early and become like a wealthy person, right? Like it's so much
Mm.
headache to build a huge company. So like to get like actual alignment with investors, I think like taking a secondary is reasonable. Uh, yeah, I think if you ever get above like 100 million valuation, you should, and like assuming you're not already like wealthy, I think you should do the rational thing as a founder at least. For employees, it probably doesn't make sense at like 100 million valuation. Just like their stake is not as significant, and normally not that many people have vested that much. So maybe you do an employee secondary a little later. But yeah, I think actually like both investors and founders are like relatively aligned and doing it relatively early.
Got it. Yeah, that makes sense.
I think Jesse also like.
Jesse's like, oh my god, I should have done more in the last round.
Yeah.
It's all right, Jesse.
No,
Take one of
I
those
mean,
preempts.
so yeah, I mean, I'm quite fortunate. I had like a good outcome in my first company. I also like generally my utility on money is like I don't like to do that much stuff in general. So like I think like it's like enough for me. But I think in general, the thing that has made me kind of get to the view that I talked about before is that I've just seen so many situations where this did not work out, where
Yeah.
like people just like raise large rounds and then like actually, it's not that like they would have not succeeded anyways. It's that like the round has actually like capped the amount of exit opportunities they have, and they are like actually regret doing the round. So I think it goes both ways. I think like if you're an ultra successful company like Mercury, it's like easy to I think it's. I mean, actually, I don't even think that's true. I think it is just going to be really founder dependent. Like, I think it's like depends on people's like risk profiles and like what they want out of it. So, yeah, I agree with that.
I think it's
I
fair
would,
to say you're committing to try to build that huge company at that point, which
yeah,
like, some people don't want to. Yeah, go Raj.
Yeah, I think we've ran that experiment now, a couple times with SoftBank and then Tiger, right? So I think SoftBank created a lot of zombie companies to some degree, right? Where they just stuff
Yeah.
money in. The problem also with stuffing a lot of cash in, it takes a lot of discipline to not spend it, as what as Imad outlined, and it changes the employee mindset when they know you've raised a mega round, right?
That's true.
Um,
It's hard to
and
be
that's hard.
disciplined.
Yeah, it's hard to be disciplined. It's hard to think really, as a smaller company when you have so much money in the bank. For an enterprise company, actually, like yours, Jesse, it does help to have a big war chest, right? Because you're a safer option, right? From that perspective, and having brand name backers and stuff, like someone like Bain, could be well
Wait,
known
so
to your customers.
why is that like when you're selling, like an enterprise doesn't want to be like, oh my God, this company's going to die tomorrow, so I don't want to work with them,
Absolutely,
that kind of thing. Yeah.
yeah. They're super risk averse. They're going to pick the safest option in every scenario,
Hmm.
and so they're going to look at company stability and company capabilities as much as the product, and like they're going to look at support. They're going to look at deployment operations. Like I'm sure when Jesse sells them, he's not just selling them a product; he's selling them a company. From
Yeah.
end to end package, which is very different from consumer and even SMB. Who are very much buying a product, um, and so, but all that to say is that, like, yeah, we've run this experiment, and I do think it's hurt a lot of companies. I mean, Imad, there's been a lot of companies that were really high profile, 4 or 5 years ago. You never hear about it again, right? Like
I mean, to be
it's like,
clear, like rationally, you're probably right. I'm just telling you, I've had these conversations with founders. Like, it is very, very hard to get someone to take like a 5x lower valuation, right? Like,
Yeah,
like
I'm sure.
it's just
Yeah.
like what is the argument you even make? Like, it's like you can talk about it, but like as long as VCs out there doing these crazy valuations, founders will be taking them. Is like my
Yeah.
experience of it. But I agree, it's weird. Like, I mean, ideally, that's why I think like you don't take that like crazy Tiger or SoftBank valuation, but you still take a crazy valuation. Like that's just like
Yeah.
it's just too much human nature in these big markets.
yeah, I think like the Tiger stuff where they were writing massive checks at like really high valuation on a 15-minute meeting in often cases, right? Like you would meet with this guy John. Everyone knew about this. Meet with this guy John, and he would like, commit to like several hundred million.
Wait,
And
specifically, it was John, or you're just saying a John-like character?
no, it was a guy called John. I think John Courteous or something, right? Like everyone met with, and he would just write. He was famous for this, right? He was just like 15-minute meetings, and he commit like massive checks in those meetings. Um, but yeah, but I worry about this for founders. The thing with founders as well is that they don't have a financial. They're not as financially savvy for sure as like investors, and they're builders, they're operators, and I don't think they think. Jesse's thinking very thoughtfully actually, and I think that's rare for most founders. Like they don't have the full, like, especially before in the Tiger and SoftBank, they didn't have the history of like how that ends up. So
Mhm.
at least now there's maybe some scar tissue built in.
Yeah. Well, Jesse sold his previous company. I think that's like a big advantage of being a second-time founder. I
Yeah,
think you
and my
tend to-
co-founder is also very thoughtful about this stuff. So it's like it's easy for us to like regulate each other a little bit.
This was a super interesting conversation, Jesse. Yeah.
Yeah, it's really great chatting with you both. Thanks for having me.
Yeah, we were trying to give you difficult questions, and I'll make it easy for you. But
No, I really enjoyed this. Yeah, it's nice chatting, and yeah, looking forward to chatting more. But thanks for hosting me.
yeah, congrats on all the success.